Here are the 5 things that you need to know about stocks in order to pick the right one. I'm going to show you the 5 things that most people scroll past but are essential when looking at what stock to buy. The price of the stock, but it's meaningless looking at it just alone. Apple is trading at around $300 a stock, whereas Nvidia is trading around $219. That would make you think that Apple is more expensive stock than Nvidia, but that's incorrect. Price per share tells you nothing without context. A $5 stock can be wildly overvalued, and at the same time a $3,000 stock can actually be seen as cheap. Price to earning ratio, or the PE ratio. The PE ratio looks at the price divided by earnings per share. As an example, Apple's PE ratio is currently 36. That means you're paying $36 for every $1 of annual profit they make. The S&P 500 PE ratio average is currently around 21. That would indicate Apple is trading at a premium of 71%. Whether or not that's actually justified really depends on the growth expectations of the company. EPS, or earnings per share. What this looks at is the actual profit the company makes divided by the outstanding shares. A constantly rising EPS year over year is one of the clearest indications of a healthy business. Whereas if you have a flat or falling EPS and a rising share price, that can be concerning. Market cap and dividend yield. Apple's market cap is sitting at 4.4 trillion. That's a fancy way of saying Apple has a total market value of 4.4 trillion. However, they only have a dividend yield of 0.35%. That's primarily because they reinvest all of their profits to keep growing the business. On the other hand, Coca-Cola's dividend yield is sitting at 3%. It's a much more mature business and they prefer to return the cash to their shareholders. Neither of these are necessarily better, but what it does indicate is they have different philosophies towards their business. The 52-week range. Apple's 52-week range is $193 to $303. What that actually means is that in the past 52 weeks, the share price has gone as low as that and as high as that. At its current share price of $298, what that tells us is you're buying nearly at the height of the 52-week range. Now, that doesn't make it a bad investment, especially if you believe it's going to continue going up. However, what it does change is the risk profile for investing in that stock. On the other side, if you find a stock that's trading near its 52-week low, it could be a great opportunity to get in, or an indication that the business is sliding. Next time you're thinking about investing a stock, make sure you look at all of these 5 and more. Follow along for additional tips and tricks.